Hi everyone and welcome back to the channel. The mainstream media and the experts on China have been predicting the coming collapse of China for the last 30 years.
Saying the coming collapse of China. We are still waiting. When is it going to happen?
Well, in 2001, I said that it would take a decade. So I'm a little bit more than a year out of time. But what we are seeing right now is really signs of distress in Chinese society. We see an economy which is faltering. The Communist Party is stumbling. The authority of the central government is eroding. Military is breaking free of civilian control. And of course, we have all these protests across China, many of them
The problem now is that China is drowning in debt and there is essentially nothing left to build. It means the country is littered with sites like this, the most visual representation of an economic model that was never sustainable.
This collapse never happened, and during past few years we're seeing more and more tariffs on Chinese product, meaning that not only China did not collapse, they also outcompete the US in many areas of technology and production. Today, we're going to go over the divergence between the stock market, financial market, and the real economy. How the real economy is not stock market and the stock market is not representative of a real economy. As being told us by mainstream media that the stock market slash financial market and economy are the same thing and represent the same thing, I'm going to show you that there is a divergence between these two and why the coming collapse of China never happened, because the China's real economy is growing, but in the case of US only the financial market getting bigger and the real economy is stagnant for decades. As I'm gonna show you, you're gonna see the divergence between real economy, the thing that everyone experience every day with their expenses, with their groceries, with their rent, and the economy, the GDP number, and the financial market. There is a huge divergence between these two. And the mainstream media tries to only show you the GDP and the financial market booming and don't want to show you the real economy that everyone experiences in everyday's life. So the first chart is GDP of the US. As I mentioned before, the financial market is getting bigger and bigger and become bigger part of GDP. As you can see here, since 19 we could go here to 1980. Since 1980 the GDP always is growing. The gross domestic product is growing and never had, except a very short period of time in the pandemic and a short period of time in a great financial crisis, we had some decrease in GDP and then we had a comeback after that. So as you can see, if we look at this specific chart that shows us everything is getting better, the economy is growing, and everyone asks this simple question: if the economy is growing, why Americans are struggle to pay for even very basic thing like groceries and they live paycheck to paycheck? So I'm going to show you what's the reason behind that. This is the GDP of the US. The second chart is S&P 500. That is a uh, good index for showing the whole financial market, US financial market or US stock market. So as you can see, since 1980, the stock market always growing except certain period of time that was stagnant or decreasing, and is really booming right now, the stock market. So the GDP constantly increasing, the stock market is constantly increasing. So what's wrong with the economy? In the third chart, you're gonna see the GDP based on PPP, purchasing power parity. This is something that ultimately matters. The consumer, how the consumer experience their everyday's life, how their money that they gain is going to translate to their purchasing power. So as you can see, the share of the world, I'm going to go over this specific chart here since 1980. Since 1980, the red line is European Union, the orange line is United States. As you can see, the power parity keep decreasing uh, all these years, means people are less able to purchase things that we were able to purchase in 1980 in 2024. And as you can see, the blue line is China. The purchasing power parity is keep increasing during the last 44 years. So as you can see, the coming collapse of China never happened because the purchasing power parity of citizens are increasing and quality of life increasing. While in European Union and the US, the quality of life is decreasing. That's why everyone's is try to just pay for their very necessary stuff like grocery to feed themselves, like rent, shelter, something that's very basic, goes back thousands of years. Shelter and food was very basic. And when you look at these two charts, you couldn't believe that how we get here with a booming GDP and a booming stock market, but that these two doesn't represent the quality of every day, at least 90% of society. Maybe the first two chart has been very beneficial to top 10% or 1%, but for the rest of society, these two charts were not beneficial. And you need to also consider that in 2008 2009 great financial crisis, many people lost their home, many people lost their investment. Also in dot-com bubble 2000, many people lost all their savings. So even the stock market that is booming was not beneficial to everyone, even those people that participating in the stock market. So as we went through this tree chart, you witness why the mainstream media won't show you the purchasing power parity graph. They always show you the financial market, stock market, and GDP. So whenever you hear in the mainstream media that they talk about the booming of economy, they're not meaning the real economy. They're talking about the booming of GDP. And GDP won't benefit everyone the same. It mostly benefit the top 10% of society. And the rest of society tries to live paycheck to paycheck. And this is how they manipulate the numbers to convey to the citizens that everything is good, everything is okay. But when you look at the purchase power parity, you see is being falling for decades. Now I'm going to show you how the stock market itself not benefiting everyone the same either. So not only the whole economy is not benefiting everyone the same, the stock market is not benefiting everyone the same either too. So let's go over and I'm going to show you a few more graphs that how stock market is really benefiting the top 10 and sometimes 1% the most. Let's go. Okay, today we're gonna go over this article by Motley Fool, and this is gonna gives us some updated information and data. It says around 158 million Americans are participating in the stock market, so it means like half of the country, and it means half of a country is not benefiting from booming stock market. And so let's go over to the half that is participating. The half is not participating, is not benefiting from the stock market. So let's see the other half that is participating. How is it going for them? I'm gonna go over this part that is giving us very good information. Stock ownership by level of wealth. While more than half of US adults own stock, most don't own much. The wealthiest 1% holds 49% of stocks, worth $19.73 trillion with T. So as you can see, 1% of the 158, around half of the population, means around 1.5 million people own half of all stocks. So 1.5 million people out of all the population of the US and out of those people that participate own 50% of the stocks. It means half of all the stock is owned by them. And if you expand to the top 10%, the group holds 86.9% of the stocks, which have a value of $34.7 trillion. So essentially 10% of that 158 million people that participate in stock means around 16 million people hold almost 90% of the stocks. So like 16 million people almost hold all the stocks. In comparison, the rest of country has seen stock ownership dwindle. The bottom 50% of America, in terms of net worth, only owns 1% of the stock. 1%. The bottom half, only 1%. So as you can see in this chart, uh, the the purple line is top 1%, and is very consistent for decades. It's not something that recently happened. Consistently own the most stock. And the blue line we have between 90 and 99%, and the green line between 50 to 90%. And as you can see, it's very low. The bottom 50% is the yellow line. So as you can see here, half of the population is not participating in the stock market, is not benefiting from the participation. Half participate, and of those half, only 1% own half of all stock. And if you want to expand it to 10%, own almost 90% of all stock. So all the benefits not going to everyday working American people. All the benefit go to top 10% of income distribution. And I'm going to show you one more graph, and I'm going to wrap up today's graph. Here it shows stock ownership by race. As you can see, the purple line is white. So the stock ownership being consistently dominated by white American. And when we go to black and Hispanic and others, as you can see, is like barely 1% of society, or others maybe maximum now is reaching to 10%. So as you can see, is all actually not going to benefit from other demographic group, and not benefiting the whole society, the whole working class. So I conclude today's video with the message that the next time when you see in mainstream media they talk about the coming collapse of China and the booming economy of the US, you need to consider that what we're witnessing is the coming collapse of purchasing power of US working people. So this is coming collapse of American worker purchasing power. I really want to know your idea. How do you experience your life? Do you feel the same in your everyday's life, or everything is better that it shows in these graphs? And thank you, and please support my channel